the IDFC, for example, the IDFC Climate Facility could be a good instrument to share this expertise with the banks, with our partners, and what we can learn from the banks, for our partners, is, for example, how to finance adaptation project. The discussion we had with this African banks for that she wanted to issue a green bond is how to mix a project between adaptation and mitigation in these green bonds, and maybe tomorrow to introduce biodiversity issues, for example, in the green bonds. We do not have as IFD specific experience in this field. So what especially in Africa, local financial institutions face daily challenge related to adaptation. In France also, but it's not the same. There is some difference in my opinion, and how to select, to assess an adaptation project. This is a topic for reverse innovation, in my opinion. We have the same discussion in Peru, for example. That is, the country is very vulnerable to climate, physical climate risks, and we have the same discussion with the banks. So my problem is adaptation of my clients, their vulnerabilities creates financial risk for me. How can I help them to enhance or lower their climate vulnerability? This is a very important discussion, and I've decided we don't have any concrete experience of that.
But you expected there would be something come in this direction.
Yeah.
Barbara, how do you see that topic of, what do you call it, reverse
innovation?
Reverse innovation.
Yeah, actually, I have one example. With Inter-American Development Bank, IDB, we have worked for a long time on climate finance in Latin America. And I think these activities, like the focus of our partnership, was one of the triggers that actually encouraged IDB to build up a strategic division. I think they have 60 people in their organization working on mainstreaming climate finance, on devising strategies in climate finance. And recently one of these colleagues from IDB joined us, and we learn a lot from her experience as to what we can do as a strategic sector policy division for the benefit of developing our portfolio in climate finance. So I comment this on a more strategic level, but I find this development also quite interesting, and we are very happy about her insights, which actually stem from a partner institution of ours.
Okay, so even staff exchange, perfect. What I'm wondering in terms of, because Admasu, you just touched on it, on the impact side. So do you also foresee, we'll start with you, Bastien, do you foresee the topic of impact becoming much more prominent in the coming years? Because I think if you look at COP around here, of course, there's not this many people from financial institutions, but there's many people very much interested in the impact topic. So do you foresee there an increased necessity, demand to respond to that?
Yeah, sure. It's obvious. As President Tadesse said, it's a topic that the financial institutions are not often very friendly with, because you have to implement a new culture of measurements, impact assessments before the project, during the project, and after the financing. In my opinion, and public development banks are specifically concerned by this issue. It will transform the function of the public development banks and of the financial system as a whole. The impacts have to be the key driver for funding, for asset management, for portfolio screening, for risk appetite framework designing, etc., etc. At AFD, we are trying to implement some processes that, in order to link more directly the impact and the funding. The green bond is one of these solutions, but it's not the only one. We have sustainable second opinion during the project and after the project. You have ex post assessment evaluation of the project in order to document, to demonstrate the impact of the project. This is one thing, but I wanted to insist on the other thing about measurement of the leverage effect of our project.
Mm-hmm.
I think we need more detailed, precise methodologies to quantify the leverage effect of our operations. I mean, you cannot quantify and have the same impact with classic green loan and the green tier 2 I showcased before. You have a leverage effect, you have transformative effect that we have to measure in order to design the right incentives within our banks. This quite innovative instruments for financing green bonds are very interesting, but can be heavy for the team project that submit to the internal committees, to the stakeholders and so on. We have to design, this is my personal conviction, design more positive incentive for such a project that have an important leverage effect, and we have to measure this leverage effect as precisely as is possible.
Yeah. Barbara, in one of the examples you mentioned before, you talked about how to pay for, and basically pay for impact, right? To have to incentivize that. Can you maybe elaborate a little bit more on it? What's the direction you're looking at there at KfW?
Yeah, that was in connection with the green bond issues we support, and yeah, there's various ways you can actually subsidize the repayment of these bonds. You can subsidize the coupon, and you attach that to the targets the issuing entity attaches to these green bonds. The higher the targets, the higher the framework, or the higher the standards they attach to the framework, the more they get in terms of subsidies for their coupon, for their repayments. It's as simple as that.
And how do you measure what's the trigger basically? How do you measure the impact? Is that a separate system, or is that something which is organized by KfW? Or is it second party, or how does it work that this is triggered basically?
The precondition for a green bond to be issued is that the issuing entity can report to their investors as to the impacts of the underlying assets in terms of climate mitigation effects, for instance. And you attach whatever you want to achieve, the level of the standards to this reporting framework. And a basis for the reporting framework is that you really know what you want to accomplish with the programs underlying the bond issue.
Thanks, Barbara. Admasu, how do you look at as TDB at the topic of impact? Because that's something obviously being asked for, but how can you integrate, or how do you integrate it into your system so it doesn't overwhelm the system with the demands for additional information?
Yes, again, a fascinating topic. It can be quite scientific and technical for us. I just wanted to be a bit practical. I think sometimes what stakeholders are looking for is not necessarily a scientific statement that gives very high levels of confidence that you're making very strong statements on a scientific level. I think if you can demonstrate output as an intermediate or proxy indicator of outcome, and then what you do is you apply audit-like principles where you select a few cases out of a pool of projects that you've supported, and then you apply a little bit more rigorous study around that, and you try to kind of give comfort that you have strong indications that second, third level order effects are also coming through. Because I think in the final analysis, there's limits to how much you can spend on evaluation and research linked to the ex post factor of intervening in projects. I mean, I remember very early in my life, I was a monitoring and evaluation specialist, and people in that world would love to have vast resources to do quasi-experimental designs that can actually give you very interesting conceptual level information and confidence levels, because you've just put so much into it. But if you come up with a set of indicators, and some are fast-moving short-term indicators, you have your output indicators, and if those are very clearly pointing in the right direction, specifically around connecting, for instance, X millions of people to clean energy, that could be an output indicator that's not so difficult to collect data on. But first, to be able to say, well, how much emissions have you reduced? You have to do, of course, much deeper analysis. But I think there's a lot of practical output level measurement that can be done that can give enough comfort to investors, because I think people just need broad assurance. I don't think this is like an examination, like a medical room where you need precise information around exactly what's happened over a particular period of time. But just to maybe close out, to say, impact investors, I mean, we have seen such a huge change in the markets that we've been raising, funding, capital markets. I think we talked earlier on about green bonds, one or two cases. But if you're a specialist bank that tends to typically do SDG financing by definition, like we do at TDB, even before coming out with a themed type of capital or a themed bond, investors have a very good sense that if you buy a bond from the World Bank or the African Development Bank, or these are by definition development institutions, and they're always looking to have those impacts, you end up getting these days a huge amount of interest. And we raised a bond earlier this year, and we were very surprised. At the height of the pandemic, we were almost 450% oversubscribed. And we didn't label it, right? Imagine if we had labeled it and given investors that additional motivation to be able to say they hold X amount of green or SDG bonds. But just to say, even when you look at the pool of green bonds out there, I think it was about a year or so ago when the threshold, we crossed the $1 trillion mark of the amount of green bonds that are out there. I mean, I remember 5 years when the SDGs were being discussed. We were not sure we were going to get to $1 trillion in just a few years. So it's mushrooming, it's rolling out. These days, we even get calls from institutional investors who buy into our normal DFI-orientated bonds, and they actually are asking if there's private placements that they can do where they can actually, start getting closer to the institutions like us that are doing much more on the frontiers of the SDG space, but also green financing. So I think that marketplace is growing. I think this past year or two, maybe it's the COVID aspect, I just sense that there's so much more interest in a way that there wasn't just 3 years ago.
Just to build on, maybe one comment on the impact side. You want to?
Just something
Please?
to add. Yeah,
Bastian,
thank you.
yeah.
I think this impact issue is one of the driver to make a private sector come in the market. It makes attractiveness for private sector. There is a demand for impact, especially addressed to public development bank. We as FD, as issuer, we are regularly challenged about the project we submit to the pool of the green bond or the sustainable bond, etc. It's a very good by the private sector. It's a very good thing. There is a growing demand and expertise within the private sector and for buying the impact through development financial institutions. I think it's an important challenge for all of us.
Yeah. Maybe just to add to that, I could see very well that the IDFC as a club and its different members and the climate facility as an instrument could also very much support this whole impact discussion and maybe also have some common agreement how to quantify impact, because in the end it's a quantified industry, so it's about quantification of this. Please,
Actually,
Barbara.
Yeah, Masu just said, and rightfully so, that the investors' appetite for green and socially responsible investment has really grown significantly. And what comes along with it is an incentive for companies, entities who issue bonds to actually do whatever we call greenwashing. And I guess that's the reason why the regulators have entered the stage and really increased their, what they expect, their level of expectation as to what you have to adhere to if you issue a green bond, and what the EU taxonomy will look like in this aspect. I mean, it will be complex to really adhere to all this, the different components of this regime. And this is why impact assessment and reporting has gained such significance. And let's see whether we can strike a good balance between what it takes to adhere to all these expectations and regulations and the effort an institution has to undertake.
A question through all three of you, like what kind of questions, or 1-2 questions from each, would you like private sectors actors to ask you? If you could wish for a question, and maybe to add to the wish list, what 1-2 elements of private sector investments would you look for in private investors? So what would you wish for? Maybe we start with you, Admasu, on this topic. What would you like the private sector to ask you as TDB?
Well, in an ideal world, I would like to be asked a question to which I think I have a practical answer that can help us move action. And I would sort of wish for a question to be posed to say, we're all sort of now building up momentum to really pushing on the SDG agenda, the Paris Agreement. And nowadays, of course, the institutional investor world is listening, and we would like to come in. What are you doing to facilitate our participation in investments that actually help move the needle on these aspects? And if that question were to be asked to me, I would have some interesting answers. I would sort of also say, look, ever since that agenda came out, these are the steps we have taken internally as TDB to make it easier for you to come into some of these investments alongside ourselves. And I would sort of give examples of how we've arranged facilities and created different types of tranches in these facilities where we would come in and do the stuff that's harder for private sector to do, and how we've created room for them to come in and to follow us on transactions where we put out an opportunity to them that is more or less practical for them to consider. The other thing is I would sort of say to the private sector to say, look, you're so worried about risk, right? So de-risking is always the discussions we're having. I would say, well, the sovereigns, the governments who created this bank, TDB, they've now created an opportunity for you to take a less riskier position by investing into the balance sheet of the bank, getting risk-adjusted equity return, but being senior to the African sovereigns who created the bank. So we've created a senior risk capital instrument that gives the private sector, preference. It's like a preference share that I think Bastian referred to in the Costa Rica case. So I think if you can do that within an investment grade bank, you're actually giving institutional investors who normally buy your bonds and get 4% return. You tell them to come in and take a slice of your risk capital. They get a senior position to the sovereigns, but then they can get 8-9%, and at the same time they can also end up with obviously a very nice impact story for them to be able to demonstrate their responsibility as well. So that's the kind of discussion I'd like to have, because we've also done a lot as the DFI community to create more and more room for institutional investors to come into different layers of opportunities. And I think that's the question that would be useful for us to actually demonstrate the practical ways in which impact investors can come in and feel more comfortable about taking more managed risks, even if the instrument is more riskier.
Thanks. Barbara, over to you. Which question would you like the private sector to ask you?
I think one of the most important preconditions to engage in successful public-private partnerships is a truly honest conversation about risks and returns. And what we bring to the table as public development banks, donor institutions, is a long experience in these countries we focus on in this session. We have funding available to take certain risks. We are in touch with the governments, with public sector actors, and we have a certain a good overview over the needs in these markets. So the private sector could come to us and say, okay, your institution, you are focusing on certain standards and environmental and social safeguards, all things and aspects which are important in these types of activities. What is the risk you can take, and what contribution do you expect from us as private sector, and what risks do you expect us to take ourselves? And I think this honest conversation has to take place, and it would be also good if the different parties understood each other's agendas and what triggers and drives them in engaging in these types of activities in these countries, like for instance the energy sector in Africa.
Thanks, Barbara. And Bastien?
I maybe two answer. First one, the quantitative leverage effect and the qualitative leverage effect. So the quantitative one, when I invest €1 in AFD, in which dimension I can contribute to finance low carbon transition in different countries of intervention AFD, so Africa, but not only in Africa, in Brazil, in China, etc. So the quantitative leverage effect on how AFD uses its own his resource to transform and to finance low transition, and qualitative, obviously qualitative leverage effect or return on equity or in terms of impact. So when I invest €1 in AFD, what are the impact of my funding above the specific loan I can provide to AFD.
Thank you very much. Admasu, I would like to hand over to you, Mr. President, for the closing remarks.
Well, thank you very much, Mr. Moderator, Rainer, and of course, colleagues, esteemed colleagues from KfW and AFD. Been a very stimulating conversation, of course, taking place during this very special, historic, potentially COP26. I think we are, as TDB, very keen to continue innovating and to continue scaling up with partners, specifically within the IDFC, but also others. The discussions around innovation are really just so important, because the problem is we need different solutions to the problems that we've been facing for quite some time. These are not exactly new problems. We've been debating them for years. We know that we need different types of resources that are fitter for the purpose that we are all committed to. And I think that requires us to put on different types of caps where we're thinking a little bit differently. Clearly, we've talked a lot about impact investors today. We've talked about opportunities to invest in a risk-adjusted manner. Of course, one has to be frank about expectations and return levels. But I think there's also a conversation that needs to be happening between the African public sector and the European public sector, because Europe and Africa have so much proximity. There's so many important strategic aspects to that relationship. And I think the blending agenda has yet to move. And I think that blending can come in and also really give a nice push to crowding in impact investors in a way that we've not done in the past. So I think that conversation also needs to happen. And I don't think we've covered a lot of that today in this particular panel as IDFC members, but I would be very keen to see the momentum also pick up in conversations between the EU and the African Union, and then of course the EU governments themselves, to see how we can do things a little bit differently, put their shoulder to the wheel so that we can create more opportunities for the scaling up agenda. Because if we just continue to go at the rate we are, we'll be talking billions here, billions there. We're never going to get to the bigger conversation of moving from billions to trillions. And so I think we really do need to ask some hard questions in terms of doing things a little bit differently. Too much comfort still within the established development community. So in that regard, I think this panel has provoked a little bit in terms of instruments, but I would hope to see follow-on conversations on some of these bigger ticket issues, which can actually flow in, create a waterfall effect, and actually give a lot of fuel to these instruments that we've discussed today. So on that note, my warm appreciations to you, Rainer, for excellent moderation today, and to our distinguished colleagues from two strong IDFC members, who IDFC has had great chairs for many years. We're celebrating 10 years as IDFC. And for almost half that period, KfW chaired, and the other half, it's AFD. So you've been really, leaders in our industry, both at the level of thought, but also bringing the institutions together to try to make a more synergistic impact together. So my warm congratulations to you for your leadership in the industry, and it's been great collaborating with you from the TDB side. On that note, thank you all very much for attending the session, and over to you, organizers.
Yeah, thank you very much. Thank you, Barbara. Thank you, Admasu. Thank you, Bastien, for the session. I think we close it here. You said it all.
Yeah, thanks. It was a pleasure. Bye-bye.
Thank you, Rainer, for the moderation.
You're welcome.
Thank you.
Bye-bye. All the best.